Good morning and welcome to the Camarda Wealth channel. I'm your host, Troy Lerche, bringing you the weekend wealth. This is for the week ending November 26, 2021, which was Thanksgiving week. I hope everybody had a good Thanksgiving and got to visit with family and friends and stayed safe. As most of you know, it was a short week. The markets were closed on Thursday, Thanksgiving, and they were open Friday, the 26th. They are open till 1 o'clock, and so it's a short trading day, and usually it's very light trading volume. And we'll talk a little bit about the what took place on Friday. It was a big down day, and we'll talk a little bit about what the concerns were. But we'll jump right into our typical stuff, which is the CAPE indicator. The CAPE indicator is at 38.77, which was down a little bit from 39.64 the prior week. We are still in cyclical bull territory, which is our longer term cycle. And then we currently have 3 of the 4 indicators are positive. So the fourth indicator that turned negative is a really short term one that we don't execute any trades on, but we're watching just in case this is the start of a downturn. So we're on high alert. We're watching it every morning. So with that being said, we had the U.S. stocks decline during the shortened week with the emergence of the new potentially more contagious coronavirus variant in South Africa. Triggered a pretty sharp sell-off. The Dow was down 2%, NASDAQ down 3.5%. We had overall large cap S&P 500 was down 2.2%. We had mid caps down 3.2%, and Russell 2000 small caps were down 4.1%. So not a very good week overall, but we were pretty strong going into the week. So internationally, we had a lot of the major markets were down as well. I'm just going to touch on a couple. We had developed international markets retreating 4% and emerging markets 4.4%. Commodities, sometimes commodities can be a safe haven, but they were not. Gold sold off 3.6%. Silver declined even more at 6.8% down. And then copper was down 2.6%. And then we also had oil sold off over concerns over travel restrictions due to the new COVID variant. And West Texas Intermediate crude fell for the 5th consecutive week, plunging 10.3% down to 68.15 per barrel. So that was a big move. Oil had been pretty strong over the many past weeks, and now it's retreated. We had some existing home sales were up in October, and the median price for existing homes was $353,900, up more than 13% from a year ago. We also had some orders for goods expected to last more than 3 years, so-called durable goods, fell last month, but economists were quick to point out that the report wasn't as bad as the headline suggested. The decline stemmed entirely from few orders for passenger airplanes, which is when excluded the transportation category, orders rose a solid 0.5%. So that wasn't too bad. Demand also rose for industrial metals, metal parts, electronics, appliances, electronic equipment, and networking gear. We also had spending amongst nation's consumers continue to rise. However, with inflation, the consumers aren't getting as much bang for their buck. And higher prices accounted for about half the gain. Officials at the Federal Reserve expressed greater worries about the surge of inflation at their meeting earlier this month, raising the possibility of the Fed ending or slowing down their bond purchasing sooner than previously expected. Overseas in Asia, carbon dioxide emissions from China, China, the world's second largest economy, have fallen for the first time since last year's lockdown. The reason for the decline is the clampdown on runaway real estate lending, resulting in sharp reduction in steel and cement output and sky-high coal prices. And finally, we have at the end of September, Amazon employed almost 1.5 million people around the world, with nearly 1 million in the US alone. That translates to roughly 1 out of every 150 American workers are getting a paycheck from Jeff Bezos and company, Amazon. During the holidays, the number goes up even more. This year, Amazon announced it'll take on another 150,000 seasonal employees. That's essentially the equivalent of hiring the entire workforce of Nike twice. So that's a pretty outstanding, astonishing number in the number of workers. They're actually down from 2019 with their workforce. And now I'm going to switch gears a little bit into the Omicron variant update. We got one of our other sources of data, Market Desk, put out a little blurb that we wanted to touch base about the sell-off last week and a lot of the concerns around the Omicron COVID variant. It emerged late last week. We're watching our U.S. key leading indicators for the U.S. markets will be the cases in Europe. The market sold off pretty hard on Friday because of it, which I kind of talked about, and what we're really wanted to kind of say is that right now we're still watching it closely. We're seeing some short-term volatility in the markets. We're not really reacting right away. With the uncertainty around it right now, we're not making any reflective changes to the ratings or portfolios, but we are, we're still on schedule for our typical rebalances that come up at the beginning of the month, which is tomorrow. And if you have any concerns, please reach out to Camarda Wealth or your personal wealth advisor, and we'll be more than happy to explain. And if we see anything else on the horizon or anything come up, please look out for videos from us, myself or Jeff. And if you want to make sure you don't miss any of those, make sure to hit the like and subscribe button. That's all for today. Hope you have a great day, and talk to you soon. Take care.